Alright everyone, in this video we're going to talk about closing existing or currently open positions. So for the sake of this example, we are long Bitcoin for 50 contracts. And we can see that we're in position by going over here to our open positions tab. So right here we'll see the symbol, so we're long Bitcoin. The quantity, we know that we're long because the quantity is highlighted green. If it were red, it would mean that we are in a short. The value in Bitcoin, the entry price of 8,903.5, mark price, liquidation price, the margin used, the unrealized P&L, the realized P&L, and then we have the methods that we can use to exit this position. You'll also see that on the chart there will be a dashed line that corresponds to any positions that we have opened. So this dashed line shows our entry point for the position that we're currently in, so 8,903.5, and it is going to tell us the quantity. So we have 50, the P&L that we have, unrealized, and if it is green or red, it'll show us whether or not it is moving against us or for us. So whether or not we're in profit or it is moving against us. Now, there's one of a few ways we could go about closing this position out. The first thing that we could do is choose a market order. So if I select market order, it's going to bring me to this market order template right here. And what I can do now is select a portion of the contracts that I'm long to close out or the entire thing. Now, when I click confirm, it's going to execute this order as a standard market order. Now what that means is I'm going to be selling into the available liquidity in the order book. This means that I'm going to be paying a fee, and depending on the size of my position and the amount of liquidity relative to the current market price, I may also incur slippage. So it's important to know that when you use this market order, you're guaranteeing that you get out of the position in the fastest way possible, but you're also potentially paying the most money to do so. So go ahead and cancel that. The next method that we can use is the limit order. So just like any other standard limit order, we have to pick a limit price. And since we're in a long, this limit price needs to be above our current market price. So we are placing a limit on the book the same way that we would place a limit on the book when not placing an exit for a position. So in this case, we're going to place a limit to exit this position at 8,970. And I'll leave the entire position to be sold. So 50 contracts, I'll click confirm. And what we've done is we've placed a limit order in the same way that we would with any standard order. This order is now sitting at 8,970. It's located right up here in the order book, and it's waiting to execute as a limit order. So it's guaranteeing price, but it's not necessarily guaranteeing execution. We need price to trade through our level and for someone to take the other side of our order. So this is when you want to guarantee price, and the benefit of this is you are also receiving that market making rebate for providing the exchange with resting liquidity. The last ways that we could go about closing out our position are through the use of these conditional orders. So when we click this, it'll bring us to this template right here. Now the most important thing with all of our options here is to understand that each one of these is essentially a conditional market order. So I could place a take profit, I could place a stop loss. Let's say my take profit is at 8,925. My stop loss will be at 8,930, and I'll leave a trailing stop off for this. But now when I place this order, these are going to be placed, excuse me, it needs to be greater than the reference price. What's going on? That's why I need to select that and fix it. It needs to be above my price. Didn't notice that. So when I place this order, there are going to be two market conditional orders on the book. All price has to do to execute these market orders is trade through either one of these levels. The most important thing is to understand that when price moves to my take profit, it's going to sell at market. When price moves to my stop loss, it's going to sell at market as well. So these orders are market orders. Now the benefit of using this method to exit the position is that it allows you to place this take profit, stop loss, and trailing stop all at once. It's a very convenient tool, and it takes away friction from the trading process. So these are the ways in which we can close out the position, and they're not much different than they would be if we were just executing these manually by going into the actual order area template that we place the positions in to begin with.
Excited to exhaust your credit card's limit this Cyber Monday? Well, so are hackers and snoopers. Secure your connection with end-to-end encryption and have a safe online shopping experience.